Good morning, everyone, and welcome back to this week's episode of the Broker Breakdown with myself and Mike. Mike, we've had a lot of rain in the last week, at least in Hamilton and like Hamilton, Burlington, Stony Creek area. How have you guys fared in Welland?
Yeah, it's been here and there, spotty. You get like these random storms that come through, and then it goes away. I think even just yesterday we had some pretty heavy rain cells out kind of Crystal Beach, Waynfleet area, not too far from here. So it's been it's been nice one day, and then you get that kind of heavy storm coming through another day. It's odd.
We needed the rain though, so I'm not going to complain. I would have liked it more scattered than just like Saturday, Sunday, Monday, Tuesday, like all like in a row like that. But again, we really needed the rain because like June, we basically had nothing, right? Like we went almost all of June and didn't have one rainfall.
Yeah, it was definitely dry here for a few weeks on end.
But yeah, hopefully moving forward, like it looks like the next little bit is going to be pretty hot, to say the least.
Summer's here.
Yeah, it's looking like 30 plus degrees at least in Hamilton for the next like week, almost 2 weeks. So we'll see how that is, and very little rain in the forecast. So I guess we'll have to see how that plays out.
Yeah, it's not the worst case. I don't mind as long as I'm not on the course when it's raining. I don't mind it if I'm at home working. I actually like it when it's raining when I'm at home working. It makes me feel more accomplished some days.
I know I went out with my buddy and we played a quick 9 last week, and of course it didn't rain all day. We got to the course, not raining. Get to the T block on 1, doesn't rain. Get to T block of 2, rains. And then it literally, like, it wasn't like raining bad, but it was raining enough where it was like, okay, this is like kind of uncomfortable. And then on 8, it stopped raining, and I'm like, really? You couldn't just hold up a little bit more until we got home? Yeah,
I know you can't predict it too. That's the worst part.
That is the worst part.
Radar shows as much as it does, but the elements are what they are when you're on the course.
But this week we have a little bit of a different episode. Kind of goes into my realm a little bit more on the commercial side of things. Just something that we've seen a lot recently in the news. Probably not for good reasons, but and it kind of came to our mind that we're like, oh, you know what? Like, this is obviously going to impact a part of our industry that some people might be aware of, some other people might not be aware of, because it is a very, I would say it is more of a niche product in the commercial space. But we want to talk about builders risks, and the reason why we wanted to talk about builders risks today is, again, if you look back, even in the last 12 months, Mike, we have seen endless amounts of new construction either catch fire or something severe happen in these new builds, and then basically there's massive claims that are having to be paid out. We'll get more into depth with them as we go through the episode, but the one that really just kind of comes to light is literally the one that happened last week in Oakville there, Mike, where they basically had 10 homes in a new subdivision basically catch fire. And they're basically saying right now they're docking it up as improper welding.
Yeah. I mean, builders risks are they're super important to have for this exact reason. Obviously on like more of a larger kind of manufacturer builders that are pumping out massive amounts of home, they're going to have, just massive policies for this type of stuff. But it's definitely been kind of recently in the news, and as people that are in the insurance industry, it makes sense for us to kind of stay in touch with what's going on, that we have a better idea about, what kind of exposures actually happen for those under construction, and how we can provide that insight to people that are doing that themselves, right? Whether it's even individuals or larger builders, for example.
So to keep it very general to start, I'm going to basically read a definition of what Apollo Insurance uses as what they describe as builder's risk. So builder's risk coverage protects contractors and homeowners in the case of an unfortunate circumstance causing loss, destruction, or damage during construction, renovations, or repairs. So it could be what a lot of people like to term it too is they like to term it as repairs and ground up construction. So basically like a new build compared to just renovating or repairing something. There's a bunch of different coverages that we do want to go over. And I think the first one, Mike, is of course going to be liability. Liability is so important when it comes to builder's risk, because even for the circumstance of, let's say you own the land, and even let's say you're tearing down a home and then rebuilding it, you still have a liability risk because people are coming on and off your property. People are walking by it. And there obviously are rules to what you need to do when it comes to a new build like this. Like most companies will almost guarantee want you to have some sort of fencing around that property so people can't just walk freely onto the job site. But still, liability is such a huge importance. And a lot of people are like, well, why do I need liability if I'm hiring a general contractor? Well, it's because the general contractor, yes, they're the ones doing the work, but it's your property, your land that you actually own. So even in the event of there actually being a claim or a lawsuit or something like that, a good lawyer is going to name the property owners as well, because they're the ones that actually own the property, Mike.
Yeah, I mean, that's the actual biggest exposure, right? I mean, liability, the fact that you can get sued for having to basically protect against anyone, whether they're contractors coming on, other random invitees, even trespassers, which is unfortunate, but that's how the industry is. Yeah, your job is to protect that piece of property that you own from, all potential risks. So that's where the big stuff happens, right? And it could be either personal injury or property damage. It doesn't really matter. If either one of them is caused in some massive amount, that's where your liability side of a policy will come into, obviously protect against those damages.
The second big one, which again, I think a lot of people would just see as common sense, but builder's risk also has basically the building covered. So how a lot of insurance companies basically base it off of is we basically ask questions based on how it's going to be built. So the materials that are being used, from the framing, from the plumbing, to the electrical, to the roof. And again, these plans obviously and are probably going to change over time, because again, you could always plan and realistically do how many plans actually go to plan every single time, Mike? Like mostly none. But I see all the time where people are like, oh, you know what, I want to do a shingle roof, but then you know what, we spent the extra $20,000 or whatever it might be, and we put a metal roof on and we never had to deal with it, right? So most insurance companies will go off of what the home is going to look like at the end of the build. So basically, if we could sit here, Mike, and basically look at a piece of property and go, okay, this is what it's going to look like once it's actually built. That's what they kind of go off of. And then we obviously use our programs and our systems to basically get a rebuild cost of that. One thing I will point out, because I have been seeing this a lot recently, actually with my clients, is that sometimes the rebuild and what the project is going to cost can differ. And again, there's a lot of different reasons why. But I always say to people, like, if our rebuild cost and your build cost are differing in a large amount, I always say provide proof, like provide the estimates and what things are going to cost. And then again, most builders are going to have that anyways. Like, you're not going to go into a new build and have nothing. You're going to have at least something where you've estimated and proposed, okay, it's going to cost us $800,000. This is going to cost us $1 million to build. And then that's kind of what we protect it for. But again, if our estimates come back and it's either higher or lower, we obviously have to figure out, well, why are we getting a higher amount? Why are we getting a lower amount for something like this, right?
Yeah, exactly. And that's been a common talking point that I've been bringing up to the people that do inquire about this once in a while, is that what that kind of finished home looks like, square footage, building materials, all of that will go into that evaluator. So it's not that if me and you were doing it on the side, it probably is going to be less, because obviously, for one, you're probably not counting your own labor into those bills. You may or may not have other help coming in to help with that. Maybe you know someone that has benefits with respect to construction pricing or builder pricing, whatever it might be. But all of those things don't really matter to insurance for the most part, because insurance is there to protect if they had to pay for a claim to rebuild that property, what's it going to cost them? So I know that that's always maybe the harder part to swallow, James, is someone says, oh, I can do it for 500, but the evaluation tool is saying, it should be 750 or 8. We have to utilize that, because if there's a claim, they're the ones paying it anyways. And if they're not getting the proper, basically, rebuilding cost evaluator, there is that chance that maybe they just say, sorry guys, like you didn't insure it for enough. And as a result, you are not going to get enough money to rebuild this all the way back to, where you were at.
Yeah, it's like I said, it's always the estimator or evaluator, like you said, Mike, is not always going to be 100%, because it's obviously not going to take into these other factors that, again, the system's not built to do that. The system's not going to be built to, okay, let's add a 10% discount because John has like a discount program because he works in this kind of industry, or take off labor costs because we have a company that's going to do it basically for free. Like the evaluator does not have that kind of capabilities. So when doing this, I always say to people, you know what? Let's give me your estimate. I'll do my estimate, and we'll kind of see where we're landing. And again, then I always kind of give my client a decision. Okay, our estimate's coming at this. Yours is coming at this. We can insure it based off you having proof that this is what you're estimating to cost. But like I said, at the end of the day, there is a difference from what I'm getting. But again, those programs are not built to do that and to have discounts and labor differences and all that kind of stuff. So that's always a key thing I point out to my clients, is that every program is not going to be perfect. So don't think that we're sitting here and we're like professionals of like basically estimating what a home is going to basically cost. Again, there's so many factors that come behind it. And again, if you're getting benefits and breaks, like system's not going to pick that up. It just doesn't work that way.
It's one of the things too that, bigger projects, that it's a whole other kind of realm, but smaller individual builders risks for like a single standalone home or a seasonal property, things like that, you can probably get it close enough where you need to have that kind of trust that whatever you're insuring is going to be adequate. That's why, you reach out to somebody else and say, this is what you need for that house, for example, the coverage on it. But there's the price aspect as well, right? So I understand. And I think one of the big things to note, James, because people don't always see this, a builder's risk policy has a lot more of exposures to it. So it's a lot more expensive than your typical home insurance policy. You cannot just in the middle of construction say, I need a home policy because my home is 50 to 60% done from being completed. Because ultimately, if there's a claim, you're not going to get paid out. And I want to make that very clear. Like, sure, you could flip a coin and argue that, but our job as brokers is to advise you the best way possible. And having a builder's risk policy is very important in those stages until you're, basically occupying the home and it's like 95% done. Because the last thing you want is for there to be damage that you have to submit, and the insurance company says, well, guys, there's no exterior on this house at all. You're not done yet. And now there's damage that occurred that could have been paid out if this was still under the builder's risk aspect, not insured as a home policy. So there is a difference. And what I wanted to make was that pricing is going to be more. There's no static number, but that same home is going to be more while under construction than when it's finished. That's just the reality of it. And that's because there are those exposures. There's, it might be more vacant at times. It might have higher chances or possibility for either arson or vandalism or theft of things on site. There's all of these other elements or exposures that don't necessarily exist when you're actually as an occupied home. So this is the way the insurance companies view it. So it's going to be more money. That's how much the policy costs. It's just more. But I wanted to hit that home because I know a lot of people will kind of question, well, why does this cost more than regular home insurance? And I think I just kind of spoke to that.
That's a great point, because that was something that I wanted to bring up as well, is that a lot of people try to get away with just putting it on their home policy. And I always say, well, no, it's not. That's not how it works. You can put renovations under your home policy for very specific and small projects. And even specific companies won't even let you do that. But if it's small, you can always contact your broker and find out what the best kind of solution is. Because if it's small, if you're renovating like a room and you're adding like maybe $20,000 of value to the home, like, again, most insurance companies will have no problem basically putting like a renovation floater on your home policy. But when you're basically going to be renovating the whole home or tearing the home down and basically rebuilding it, that is when you definitely need to go and get a builder's risk, because your typical home insurance is not covering anything in regards to that basically construction project whatsoever. And that's very key.
And the big reason that's the case is it comes back to occupancy. So if you're doing a big enough reno, James, where you're talking like structural work that you're not going to be living there while it's being done, this home is now under construction. This is not just a home policy with a minor renovation interior, like cosmetic stuff, right? So if you're physically moving out for X number of months to get work done on your home, that needs to not only be discussed for multiple reasons. One, vacancy of the home. So there's usually surcharges to policies for that. But B, if there was a claim and you're not there, again, you're kind of flipping a coin to the insurance company saying, hey, this is what was going on, but you're going to pay it. And they're going to go, whoa, whoa, whoa. They're going to throw their hands up. You mean you're doing what, $100,000 in renos, and you've left the home and no one's checking on it, blah, blah, blah. It just gets into a very gray area. So occupancy is big. I would suggest if you're living in the home doing like paint and trim and all that kind of stuff, don't worry about it. That's every single person's never going to have a problem with that. It's when you kind of get into the structural realm of things that it is definitely worth a call to your representative. That's the big ending point for me.
There's also like small little coverages that might also translate from the home. So like, for example, like there could be water coverage that you could have on a builder's risk. It's going to be very company based depending on who you go to for your builder's risk. So some will offer flooding, sewer backup, that kind of stuff. Some will offer earthquake too, which again, in Ontario, we don't really see a whole lot of that anyways, but it is a coverage you can have. There's even companies now that will offer like tool coverage. So like if there's theft or damage to tools while being on the property, that can be covered under builder's risk. Again, because it is technically a commercial policy, this is going to be very company based. Every company that I work with, that I do my builder's risks with, are very different. Like some companies will offer the tool coverage, others companies won't. Some companies, there's even companies that even don't even offer premise liability, actually, which I know me and Mike actually had that conversation a few weeks ago, that we had to be careful with, because yes, the premiums are lower, but they weren't getting the coverage that they actually needed in that case. So because it is commercial, I always say it is going to be company based. It's not always set in stone like we see on the personal lines of things, where auto and homes are pretty standard regardless of what company you go to, other than maybe premium is going to be different. So I always just say make sure that you are obviously having those discussions with your representative and making sure that you're covered for what you actually need to be covered for, because it being commercial, you're going to get tons of quotes, and each quote is probably going to be a little bit different. So you want to make sure you're comparing those differences and going, okay, like we really need this? We definitely need this. And then kind of go into what company suits your needs the best realistically.
Yeah. And there's a, as we call it, kind of underwriting perspective on builder's risk. So one thing to be cognizant about is that the policy has to be active in place before you start the forming and the foundation work on it. So this has been a big talking point, and I know that insurance companies ask the questions, which means we have to provide answers to this. And clients have always said, when do I have to start? Whether it's a week or too early when you're in that process, it's worth getting in place. If you get or start a project and then you want to get the policy in place, there are companies that specialize in that. It's not the end of the world. However, once they're already started, you are going to pay more because they're going to look at that as being that you're a higher risk. You didn't get it in place in time. There's probably possible reasons to that. So just as a general rule of thumb,
well, they're taking on that risk, right? They're taking on risk that was already uninsured prior. So that's usually why it's a little bit more expensive at that point, because you've already started it and then went, oh, I should probably get insurance on this. So now the insurance company basically has to backdate, and they're taking on all the risk that was done uninsured technically.
Yeah, now they're never going to pay out on a claim that's behind anyways. But they're basically the way that they view it is we've now taken on a project that has kind of started. And it's looked at as more like that moral hazard. It's why did the person not get it in place first, right? They're doing this project. They have lots of money going into this. They've obviously got drawings and permits and engineers, but the insurance just fell by the wayside sort of idea. So their viewpoint in general is that if you've already started construction and you didn't think about having insurance on your property, or at least that wasn't a conversation, they look at that as more of a hazard themselves, which is why you would typically pay more. So that's why I want to highlight it so much, that it's not something to kind of put on the back burner and just say, okay, we'll get started and then get it. You need and should have this insurance in place prior to the actual project starting. That's a huge point to note.
The point I want to bring up now that kind of segues us into the damages and what we're going to see happen to builders risk moving forward is a huge rating factor that goes into builders risks is going to be water protection. And by water protection, I basically mean fire stations and like hydrants. And every company is very, very strict on this because they do not want, especially now, and we'll get into this in a second, with how much is going on and how many projects are basically going up in flames, no company is taking risks right now where a project could be more than, 5 kilometers away from a station. And even there's companies that are laying down the law and saying, if you're more than 300 meters away from a hydrant, we will not insure that. So that is very, very key, because I almost say the farther you get away from these essential factors that insurance companies are basically placing on builders risk, you're going to see large increases to premium based off that. Because like I said, especially what's going on, which we'll talk about in a second, with how many fires and construction projects are basically being damaged, insurance companies are kind of laying down the law and saying, nope, we do not want this. And if we will take this, we are going to definitely charge a premium for it.
Yeah, there's definitely higher exposures, right? So they're going to have to charge what they feel is adequate for the specific type of risk. And that the biggest impact there is how much is the project worth, right? If it's the, $500,000 detached home, that's going to be X number of dollars. If you're talking about, a couple $1 million subdivision or units in units, that's going to be significantly more for obvious reasons. So I think that comes as almost a no surprise, James, to people. The higher the value of the project, the more insurance is going to cost clients on it. But yeah, it's the fire aspect is huge, right? I mean, especially when homes are being built, there's so many basically just wood frame construction semis and towns and detached that could be arguably one of the, like when you're in that phase, one of the more dangerous spots, just because if anything does happen fire-wise, your home is basically just going to go up at that point, right? It's like a tinderbox.
And people might go, well, what if I want to live out in the middle of the country and stuff? Well, the argument I always make is that even when you have a home in the middle of the country or rural property, you are going to be paying more for insurance anyways on that, because in home insurance also bases their a few factors on the home insurance side is, again, how far is it to a fire hall? How far is it to the closest hydrant? So those are also factors on the home side that people kind of forget about, is that usually when you're in the rural area, you're probably going to pay a little bit more because you are going to be farther away from a station, and you might not even have hydrants in your area anyways, because a lot of people in rural areas are on wells. So it's not really a big surprise that builders risk also base those factors off of their policies too. But again, it's a very common thing. And again, even when the home is finished and complete, that is also a factor on on the actual home insurance side of things, is that, okay, how far are these services away in case there is a fire and we have to put it out? So not shocking, but again, I think a lot of people overlook that. And I would say on the builder's risk side, I think it is a little bit more of an important factor compared to the home side of things, but I think they're still important on both sides. I think the builder's risk obviously takes more importance in it, because again, you just might have all this lumber just laying around. If one piece of lumber goes up in flames, what do you think is going to happen to the rest of the lumber, right?
Yeah. Fire is arguably one of the biggest kind of larger total losses, right? Lots of other losses can incur small damages. Fire, you're looking at, potentially the entire project. So, I mean, steps got to be taken by both the general contractor, maybe independent trades that are working. I've heard of a lot of things with, exclusions with respect to certain types of welding and, tar, torch roofs, things like that, James, are super, super high risk. So there's even exclusions where if a loss does happen from, a certain type of product being used, it may or may not be covered. So it's good to know some of those exclusions as well, because to say, hey, everything's all encompassing, is just really not the case with all companies.
And like I said, that kind of segues us into this topic here, where even over the last 12 months, we've seen a enormous amount of new construction projects basically having damage and mostly being fires. And the most recent one was, like I said, last week, June 21st in Oakville, where a fire basically destroyed 10 homes that were under construction. And basically they're saying that these homes were going to be $2 to $3 million homes. Again, that's probably not what the rebuild cost is going to be. That's kind of what the real estate value is. So even if let's say you cut that in half, let's say you're $1 to $1.5 million, that's still putting you at $10 to $15 million in damages, Mike, from the insurance standpoint.
Yeah, I have no idea what bills would be on something like that, but it's going to be quite a bit. You'd hope that whatever the builder had is adequate for insurance for a project like this, which I would almost expect, but you never know. And then it goes back to, going down to kind of almost foundation work, right? Having to get rid of all that debris removal and then basically start rebuilding again. But the whole process just takes so much longer now that they're at this stage.
Well, one that kind of hits home a little bit more for me, because I literally drove by it as it started, because I remember I was bringing my grandfather to a doctor's appointment, was last summer in Hamilton, or I guess Stony Creek Mountain, where they had dozens of homes under construction on Rymel and Upper Red Hill, I believe. They're saying about 23 units basically caught fire, and they said of those 23 units, the damages were estimated over $10 million again. So
right,
it's just, and again, we're going to go over a few other, I guess, what would you call them? Like examples here, but even just those two are now costing the industry over $20 million just in two basically claims, Mike. So I have seen in the last 3 years, and there's a lot of factors to it. As we saw with home insurance during the pandemic, we saw home insurance rise a lot because of how building material skyrocketed. We saw the same thing with builders risk, but now we're seeing builders risks taking on so many new fire claims. Like, for example, Mike, I didn't even know this, and I told you this before we started. There was a 71 home subdivision in Vaughan that caught fire in April of this year, and I didn't even know that it even happened.
Right. Yeah, I never heard about that one either. That one's a monster one as well. And it almost leads me to the question where it's, what are the processes being done by the trades that have this risk? And I know a lot of people that are sort of in the building industry would argue there's certain things you can and can't control. But I think there's got to be a set precaution, right, for depending on what higher risk trades might be, to ensure that things like this don't happen, because ultimately there's an aspect of the legal and the lawsuit side, James, that comes into us, where it's technically speaking individual trades guys, unless they're working for a company. If you're maybe, I'm not sure if they're working for themselves or working for a specific company they're for. But what I was going to say was individual trades guys need to have their own insurance, right? For doing that kind of stuff. Whether you're working for a company or if you're on your own, you need to have your specific liability insurance for that. And that goes down the whole road, right? The builder, for example, if they're subbing everything out for projects like this, are those guys insured? And who do you go after for the respect to property damage, right? That's part of how the legal system works.
And like I said, I'm giving you some more examples, but in January there were about 13 units that went up, 13 units that went up in flames in Barrhaven, so a little bit of a subdivision in Ottawa. There was a $1 million fire in Elmer, so basically just outside of London. That was in March of this year as well. So just one unit, but still $1 million. And a little bit of different one here, Mike. There was a new school being built in North Bay. Same thing, caught fire, right? So
right.
All these examples, and I could probably sit here and probably just name off and look at a bunch more, but all these within the last 12 months, Mike, like realistically, all that's going to happen is that this product and insurance, you're going to see not only based off of how rebuild's gone the last 3 years, and it's really mellowed out recently. Like the rates have gone down a lot. I've talked to a lot of builders recently, and they've said the rebuild costs have really stabilized in the last year or two, which is good to hear. But the problem is, from an insurance standpoint, the rates are just going to continue to skyrocket because, like I said, alone, Mike, just in the Hamilton and Oakville fires that we've seen last summer and then last week, we got to be over $20 million alone in there. You got to think the Vaughan ones, 71 units, that's got to be pushing $75 million there. The one in London and Elmer, that's $1 million. The ones in Barrhaven, you're probably looking at $5 to $10 million there. Like, you're almost in 6 different examples of having new build construction basically going up in flames. You almost are at $100 million in 6 examples, Mike. And like I said, I could probably pull up 10 more that are been in the last 12 months. So it's difficult because, like I said, realistically, there's nothing on the insurance end that can really stop this from happening. And again, accidents are accidents. Like, that's what you have insurance for. But when we see this many and this little amount of time, all that's really going to happen is that this product is going to take a massive hit, not only from a premium standpoint, but there could possibly be companies that straight up say, you know what, we don't want to do builder's risks anymore because our profitability is so low. Because even if they're on one of these projects and they're taking a hit like this, their profitability is going to nosedive right into the ground because of one of these like claims.
Yeah, I mean, what they'll have to do is ensure that it's properly rated for how much a project should be, and that then it's marketed to people as well to kind of recoup some of those costs over more of the long term, right? So ensuring the type of policy in the exposures within they're getting enough money for, basically, and then have enough clients buying those where it compensates, the losses of the few, as insurance is, and that risk is spread among the many people paying for that type of insurance. So same thing as car insurance, right? A lot of people drive on the road and accidents happen, unfortunately, all the time. I think we'll just see a similar thing happen with respect to how can we, be proactive in ensuring further massive fire losses either don't happen, or there's just more onus on the subs that are traded, the sub trades, or certain fire exposures, like certain types of work being done on these properties that maybe either A is excluded, or B is you have to go through very stringent kind of underwriting criteria, right, to make sure the work site is not at risk of those moving forward. I see kind of all the above happening in the short term.
And this is not even us even like giving examples of other claims. Like, I'm not even talking about theft. I'm not talking about vandalism. I'm not talking about water claims. I'm not even talking about, these are just straight up fires, Mike. And like I said, I could probably sit here for another hour and pull up at least 10 more of these that have happened in the last year in Ontario. And it's just, like I said, it's going to take a huge hit on this kind of product. And I was talking to a builder a few weeks ago, and it was funny because he was telling me that like a few of his clients used to get builder's risk for like $1,000, $2,000. And I was like, what, in like 1980? Because again, we've seen even since the pandemic, but now with all these fires, I have never seen a builder's risk lower than like $3,000, Mike. So it was just a little bit of a shocking kind of comment that he made to me. And I was like, and again, like I obviously don't have the records. I don't have the quotes in front of me to kind of see what their clients are being quoted. But when I hear stuff like that, I just get like 1,000 red flags pop up in my mind. Like, okay, like if they're getting this policy for 1,000 or 2,000, like you're saying, like what's the coverage actually on there? Because like I said, red flags to me, like that is too good to be true in my mind.
Yeah, I mean, it's impossible for me to sit here and really know what that's based off of. I mean, I would tend to agree with you a little bit there that most policies, unless the rebuilding cost of the home is quite literally like $300,000, which is very uncommon nowadays. If you're anywhere in that kind of $500,000 rebuild, if not higher, you're probably going to be high twos, if not threes and above. I mean, that's my own experiences personally. And actually, speaking of which, my dad has a builder's risk right now for a cottage we're putting together. And that was, very similar to that price point right there that I was just mentioning. So it's, super, super valuable product. I'm glad we did an episode on this because I think there is there's a lot of controversy about it in the industry where depending on who you speak with, you can kind of get a varying opinion from different people, some agents, some brokers, some regular clients, some builders. Everyone's going to have their own perspective on this. So it's good to kind of clear the air. I mean, there are, like we said earlier, James, it's going to be more expensive. It needs to be done ahead of construction start. The other big thing that I'll point out, because I had a conversation with a guy just a few weeks ago, actually, is that there's this common maybe misconception that once you gain that occupancy permit, that policy can stop, right? You can now insure it as a home. And I'm not sure if that's who's kind of mentioning that, James, if that's just people from other, clients or friends or family that have done it, or builders. I'm not sure where this kind of notion has come from, but I'll tell you for sure that if your home is not completed and it's still being worked on daily and you're not really living there, regardless of what the occupancy permit says, your builder's risk policy should still remain in force until that project is complete. I don't think you'd ever want to flip a coin saying, we're basically done, Mike. Do you think that we can stop this policy and then have water damage coming through, let's say exterior walls, for example, James, or something happen where the company's willing to say, hey, James, we apologize, but your home is not complete. And now we're going to fight you guys tooth and nail to give you what you deserve, right? So there's this massive misconception, I think, that you can just transfer it at a certain date. Like, oh, I got my occupancy permit, I can change this to a home insurance policy. I'm not going to beat it to get death as I almost might maybe just did, but you got to make sure that project is complete, or if not very, very close. And you got to talk to your representative before you go ahead and make that switch back to a home insurance policy.
Final takeaways, Mike. What would your final takeaway be on?
You know what? I think I just mentioned it all, but in that 30-second recap, I think that final takeaway is ensure that you have maybe someone that's really looking after your best interest and giving you the proper coverage and advice based on the project you're working on. If you focus on premium in this case, it's very likely you're paying for a policy that may or may not respond. That would be my big takeaway for people.
I would almost segue that and basically hop on and say the same thing, making sure that you are reviewing it like any other insurance, making sure you're actually reviewing it before you purchase it to make sure that it's something that you actually need. And if something is going to happen, you're going to be covered for it, because at the end of the day, these $1,000 policies are going to cover you for literally nothing. And if something does happen, which again, there's 6 examples we talked about today, and there's probably a whole whack more of them. But again, if you're going to pay for something, especially something this big, if you're building your home, or if you're a contractor and you're building 100 homes, you want to make sure that you're covered properly, because no one wants to sit there and go, sorry, Mike, you just tried to build your dream home and you only covered yourself for $1 million, but it was going to cost us $3 million to rebuild it. We're basically all going to give you $1 million to rebuild your home. No one wants to have those conversations. So, like I said, very similar to kind of your takeaway, just making sure you're reviewing it and you're covered properly, because at the end of the day, you're going to pay for insurance for something. You want to make sure that if you need to use it, it's going to be used properly.
The one other quick thing I'll make mention, because we didn't spend a lot of time on it, but it's very important, is that if you're building your own home and you're kind of operating as the general contractor, which a lot of people do nowadays, ensure that the trades you have are insured themselves. So if they run their own business, or if it's a buddy, it doesn't really matter. Make sure they have their own commercial general liability, because once they come onto your property and they're doing work and there is a potential for something to happen, it does open up to the whole other kind of lawsuit perspective. So I don't think that should be looked over lightly. Ensure your sub-trades have their own insurance.
And I think for most companies, especially if you put on there that there is going to be subcontracting, most insurance companies will ask for proof of that anyways. But again, you want to make sure that you're hiring people that are actually like real and they're can do the job properly and they can actually prove that they are insured. The last thing you want is to hire someone because they were a little bit cheaper than the next person was and they didn't have insurance, and their claim happens and then they were responsible and they have no coverage. So, but again, that's usually something that insurance companies will ask for, especially if you're putting on an application there is subcontracting out. They'll usually ask for proof on that end if you're going to bind coverage.
Or at least ensure that, say, I know there's exclusions in place that say, if they don't have it, there is the possibility for this to turn into a problem if and when that were to happen. So
yeah,
that's something you don't want to occur. So just in general, it's a good rule of thumb to, again, kind of check, make sure that
it's like when you have like a business and you have cars and stuff and you hire someone new, you're not going to just hire them and not like screen them to make sure they don't have tickets and accidents, right? It's the same thing here. You want to screen them and make sure that they are decent people, they're professional, and they're covered properly to work on your project. So it's just always do your due diligence, I would say.
Yeah. Not everyone knows that, right? I think a lot of people aren't fully aware of maybe the liability side behind bringing friends, trades, anyone onto a work site, let alone your home. And unfortunately, with the way that the industry is kind of going, and I guess just in general, we're becoming more and more liability based, James, I guess I'd say, where, more and more lawsuits do happen and more people are looking for some type of financial benefit from it. So that could even be family or friends. Heaven forbid, but it does happen, unfortunately. So having that protection just is another element to yourself to cover more of that, equity that you've built up over the years, I guess is what I'll say.
So thank you guys for tuning in this week. Again, we post every Tuesday at 12 p.m. Eastern Standard Time. Make sure you follow and subscribe on whatever streaming site that you use so that you never miss another episode. Make sure you check out last week's episode because we did go over a very hot topic as well in boats. And again, it's summertime. There's a lot more people on our waterways. So again, a very important episode that we did last week. So check that one out. And again, we appreciate you guys tuning in. This is actually, Mike, this is episode 25 of season 2. So we're plugging along, that's for sure.
I mean, that 25 actually feels amazing. That's just to hear that number. We never chat about the actual numbers anymore, but that's I love that takeaway.
And again, it's really all thanks to people that are listening every single week, because again, if without you guys, it's we're basically talking to no one then. So, but again, if you guys are taking anything out of it, as long as we're kind of educating even one person every single week, again, that's kind of what our job is here to do, is to spread more education on something that, again, people really don't know a whole lot about and aren't educated about. So as long as we're doing that, I feel like we're doing our jobs, Mike.
Yeah, completely. Yeah, we appreciate all the listeners.
But thank you guys for tuning in this week, and we'll check you guys next week on the Broker Breakdown.